Hey everyone, stock markets worldwide are falling and the main culprit is being blamed on the Japan carry trade. So what is the carry trade and why is it causing stock markets worldwide to fall? I'll answer that question in this video, so let's get right into it. Hey everyone, I wanted to take a moment to thank the sponsor of this video. Moomoo is a trading platform that allows individuals to buy and sell stocks and other investments. I posted the link to Moomoo in the description below. If you use that link to sign up to Moomoo, it'll help support my channel, but more importantly, you can get special incentives for using my link, including up to extra 10 free stocks. Alright, so we've seen the sharpest sell-off since Black Monday, which sent the Nikkei 225 index sinking 12.4% lower, and that compounded a 5.8% fall on Friday. The declines were sparked in part by Japan's interest rate rise last week that strengthened the yen against the dollar, as well as factors including the disappointing US job numbers on Friday. So the central bank in Japan raised interest rates. That's what caused the Japanese yen to strengthen against the US dollar. And that has widespread implications for the carry trade, which means borrowing in Japanese yen and buying US denominated assets. So you borrow in Japanese yen, you convert those yen into US dollars, and then you buy US assets with those dollars. Why would you do that, you might ask? Well, that's a bet by investors wagering that the Japanese yen will not strengthen against the US dollar at the very least. It will either stay flat or depreciate against the US dollar. But what actually happened is a reversal of that bet. So the trade went against investors, and now they're panicking to try and unwind that trade. Let's take a look at some details. All right, so I've created a scenario here of the strengthening yen against the US dollar. So draw your attention here to the old conversion rate. Previously, let's say, hypothetically, you can get 160 yen per US dollar. And then now that the Japanese central bank increases the interest rate, that causes the Japanese yen to strengthen against the US dollar. And now the US dollar, one US dollar, only gets you 140 Japanese yen. In other words, the Japanese yen has strengthened. It takes less Japanese yen to get $1, or in other words, $1 gets you less Japanese yen. So this scenario is the opposite of what investors were betting on. They were betting on the currency either staying flat or depreciating, and that way they can make money on the currency trade. And then on top of that, they're taking those dollars, and instead of letting the dollars just sit there after they're converting the yen to dollars, they're buying US assets with those dollars. And those US assets are being reported as being the Magnificent Seven large cap tech stocks. And so those assets were in large cap tech stocks, which are now trading down significantly as a result of the unwinding of this trade, which I'll talk a little bit more about a little later in the video. So now 1 yen buys you 0.007149 US dollars. And so now the amount you need to pay back your Japanese yen loan is $1.142857. So now you need 14.29% more dollars to pay back your Japanese yen loan. That you've lost 14% essentially on this trade just because of the currency fluctuation. And that's not even counting what happened to the assets that you invested in, those large cap tech stocks. If those decreased in value, then that makes that trade even worse. Which over the last couple of days, you have seen a bit of a decrease in those large cap tech valuations following these earnings releases that were not spectacular. Investors were expecting more, and the growing fears of a recession in the US given the lackluster jobs report. So all of that combined all together to create this massive sell-off. So why are they selling off now? Well, the Japanese central bank has signaled that it will continue raising interest rates. And so what's happening right now, the strengthening of the yen against the dollar, could continue, could worsen. And so investors are saying, okay, let's unwind these trades now. Let's sell our large cap US tech stocks, convert them into cash, US dollars, and then convert those US dollars into Japanese yen and pay back our Japanese yen loan and get out of this trade because it looks like it's going against us. And so that unwinding, all that selling to pay back loans has brought valuations down market wide. And of course, selling exasperates more selling, and then there's panic in the market, and that creates even more selling. And the news of the slowing US economy didn't help the situation. On top of that, there was reports that Warren Buffett sold half of his Apple stake, sold a lot of his Bank of America stake, and is holding a lot of cash. And that signals worries from investors as well, asking, well, what does Warren Buffett know that he's selling all this stock and just wants to hold cash? And so all of that is adding all up to create this big stock market decrease and creating a big sell-off. Now, the bigger question here is, what does this mean for you and me? Is this a buying opportunity, or is this a reason for you and me to sell our stocks and get out of the way before there's even more selling? I would actually argue on the opposite. This selling is to get out of trades, to get out of risk that large investors have. That doesn't really have much to do with the earnings of large cap tech companies. Those are still relatively where they were expected to be last week, right? That hasn't changed all that much. What changed is the currency, the Japanese yen against the US dollar. That was the big change. And that will have an impact on Japanese-based companies, because now those companies will find it harder to make sales in the US because the conversion rate makes it less attractive for US customers to buy Japanese products, and also when converting your dollars back to Japanese yen. So that's the primary area that will face those biggest challenges. So in my opinion, this is an opportunity to add stocks that maybe you had on your list that you felt were a little too expensive because of the strong rally in the market. This could be a good time to nibble. Now, I'm not saying that markets will rebound immediately, that markets won't continue moving downward. They might go furthermore, another 5%, 10%, 15%, they might fall. But if this is the only cause of the fall, and it's only because of the currency fluctuations, and it's not impacting those specific companies' earnings, then I feel like it's a buying opportunity, not a selling opportunity. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.